when you're looking at all of your assets, you want to be thinking which assets were around before I ever got married and which assets came into our world during the marriage, because there can be some assets that you may have acquired before you got married. Those may not be part of the marital assets, so the ones that will be split. Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, and welcome to another great episode of the Money and You Show with Michelle Perkins. Super happy to have you here today. I was doing some research for today's show. It's a solo show, and I want to help people today to plan a little bit for divorce. That might be that you already know you're getting divorced and you need to figure out what steps to take, or maybe it's something in your mind that you just want to be careful of in case. And so, it might be something potentially down the road. You're not sure. It might be something in your face right now. But either way, there are certain things that you can do to make the process easier, at least from a financial standpoint. We know it's not easy. We know there's a lot of challenge that goes along with such an event. It's a huge life event and really rocks people's world. And it rocks them financially. And so I thought, given that divorce is at least going to occur in 50% of marriages, statistics are probably different now than they used to be. And if I could guess, I would say it's probably a higher percentage. So, it's a topic that obviously isn't affecting everybody, but is affecting a lot of people and could affect anybody. Let's be real on that one. So one never knows. And if you've ever had a friend who's been kind of blindsided, well, you know that these things can happen even when we don't see them coming. And so kind of like caregiving with older parents, when you have something that's emotionally so difficult, psychologically so difficult, logistically so difficult, what we don't need is a whole bunch of financial difficulty on top of all of that. So as I was researching, I came across something that I wanted to share because I'd never heard this term before. And actually, as probably sad as it is, it totally made me laugh when I read it, because I was researching, ways to prepare yourself financially for this life-changing transition. And I saw something, an article, a blog that said, "What is walkaway wife syndrome?" And I thought, at first, it made me laugh. And then I read, walkaway wife syndrome is actually a thing. And it's a term used to describe a wife's behavior when she abruptly ends a relationship without first attempting to resolve conflicts. Apparently, we don't have a walkaway husband one, but they too might attempt to leave a relationship without resolving conflicts. Walkaway wife syndrome is often also referred to as neglected wife syndrome or sudden divorce syndrome. Neglected wife syndrome, lonely wife syndrome, and tired wife syndrome are all terms used interchangeably with walkaway wife syndrome. So while this really isn't funny because it's about a very unhappy woman in a relationship who finally just leaves, who knew there was such a syndrome with a name? So, okay, let's get back to that was actually put out there by a law firm in New Jersey that was talking about this, because it does have impact in different states why you choose to leave a marriage or how you leave a marriage. So there is a lot to think about. We're not going to get into the legal aspects of this as much as the financial. So mostly because I don't know very much about the legal parts, but I do know something about the financial parts. So let's just talk for a minute about something, whether you're planning to divorce or not. I've brought this up before. I think I've done whole shows about being organized with your finances. And this comes up with everything, whether, whatever it is, whether you have a health issue and you need care, or you're caring for somebody else, or you're preparing for divorce. or you're just trying to be really good managing your own finances, it is crucial to be organized, to know where to find things, to know, to have access to things. So Wells Fargo put out an article saying that to prepare for the legal process, it's important to gather your own copies of current and past financial statements to gain a full understanding of all accounts that you and your partner hold both together and individually. Now, this could be an eye-opener. There is something called forensic accounting that sometimes is done in divorce proceedings, really to look at what might be hidden, what might be missing, what might be not accessible to one of you or the other. And so that's one of those things where one shouldn't wait to organize these things and to understand where your accounts are and to make sure really that you know about all of the accounts. It's quite common, actually. And I did another show with a fantastic guest talking about this because that's her whole job, is to go in and investigate. She is a forensic accountant, and she had written a great book on divorce. I'll put in the show notes a reference to that show because that would be a good follow-up to this one. But there are some really important things to know about your own accounts. People vary, whether it's a man or a woman. Oftentimes there's one of you who knows where everything is and has access to it, and another one who's just letting the first one manage it. So you can clearly see how that can be problematic, and you probably shouldn't set up that kind of system in your relationship. But the first thing to do is to really get to know all of your accounts. You really don't want to do this in anticipation of divorce. You want to do this just to do it. Okay. So organizing your financials, that's just something that should be done anyway. If you're faced with a divorce situation, you're going to need to do it. Hopefully you've done it already and it's easy for you. Or for some people, you might be kind of pulling it all together and really seeing everything organized for the first time. What do you organize? Well, assets. So you categorize things. And I would say Wells Fargo would say, here are the things. There are some add-ons that I have, but all your assets, which would include checking accounts, savings, investment accounts, these are your assets. Property is also an asset. So what property do you have? What land, what homes, what vehicles, whatever properties. Your debts, so credit cards, loans, lines of credit, mortgages, household expenses. What are your household expenses? Hopefully, with all of this, when you start doing this in anticipation of a divorce, you realize, and hopefully for any listener, you're just realizing that without divorce, you still need this stuff. You need to know where everything is. What are your household expenses? This is your budget, basically, right? So how do you spend your money? Where does it go? And, to what vendors or companies, what are the details on that? And then retirement accounts. So you might have a variety of retirement accounts. There might be pensions out there. You might have IRAs, 401k plans, whatever it is. That all has to be pulled together because eventually you're going to be making decisions about who's getting what, or you're going to be splitting things down the middle or whatever you decide. So you need your titles to your properties. You need insurance information. You need to do some things with the insurance. You need pay stubs, you need tax returns, all of this stuff pulled together and know where it is and know what's in it. When you look at insurance policies, for example, who are the beneficiaries? Sometimes that stuff's just gotten old and needs to be adjusted. Titles to properties, who's on the titles? I mean, sometimes it's both of you as a couple, sometimes it's not. So it's very interesting. And depending on the state you live in, that may or may not make any difference at all in terms of splitting. But there are complications and things will have to be retitled in some cases. So that's interesting. There's also, when you're looking at all of your assets, you want to be thinking which assets were around before I ever got married and which assets came into our world during the marriage, because there can be some assets that you may have acquired before you got married, those may not be part of the marital assets. So the ones that will be split. And it's again, just different scenarios. So you may or may not know, but you do want to at least know what came in before. And also, what assets do you have that may have been inherited? Either you or your spouse may have inherited some assets, and those may or may not be subject to being split. So these are things you don't have to know the rules necessarily, but you have to know your assets, and you have to make sure that when you're putting all of this together, you're actually thinking through all of these nuances, and then you can talk to your legal advisor about what can happen with those. But definitely you don't want to just commingle everything if there were things that were brought in before you were married or were inherited. And maybe even some gifts, but that's a question for your lawyer. So once you've gathered all these important key documents, you have them all assembled, you know you've got everything, there's nothing out there that's missing. You want to determine what you own and what you owe. So you should have the information because you've gathered it. You want to determine whether you will retain some of these accounts. Are you going to retain a joint account? Are you going to retain individual accounts? You should definitely have an individual account, but what about those joint accounts? Sometimes there's a reason to keep those. Now, of course, this may or may not be, there's a range, there's a big spectrum from super friendly and accommodating to very divisive and difficult. Depending on where you land on that spectrum, some of these things you'll make decisions together and they'll be just easier to make. So that's also the goal. The more you can come together on finances and in general, so that this all is an easier process, that in itself is something to work on and to participate with the other person so this can go more smoothly. And so some of these ideas, like determining whether there should be a joint account, that's something you'll have to determine together. So keep that in mind, that whatever it takes to try to get to decisions in a calm, easy way, that would be the ideal. Identify where names or address changes may be needed. That's important. Determine if you need to establish any new kinds of individual accounts. Usually you will want to have a new individual account. Again, we talked about reviewing beneficiaries, and consider changing and securing passwords and PINs on all of your individual accounts and cards. That's kind of important, gives you a sense of security that this, whatever it is, will be, yours alone. So that can be really important. Also, your credit. It's really important to think about your credit during this because all kinds of things can happen. Maybe people are doing things intentionally to kind of mess with your credit. Maybe not, but you want to be aware of your credit. You also want to be aware of your credit cards because it might be your credit card if it's used by somebody else, or if it's a joint card used by somebody else and not paid, for example, this will affect your credit. So it doesn't matter who's doing the buying on the credit card. If you're both on the card and the card isn't paid on time, it'll have a dramatic effect on your credit. And you want to remember that about 35% of your credit rating, your credit score, is about on-time payments. So that is a huge part of, it has a big impact on your credit score. So IRAs are interesting. There's a lot, they do get split. So IRAs are usually in the name of an individual person, but that gets kind of commingled in a marital situation and split between the two partners. If, however, you have inherited IRAs, those may be different. So that is something to definitely, again, keep separate, keep in your own name. And one thing that I read that I thought was really interesting is, say you inherit your parents' IRA account. So that's called an inherited IRA. You would want to keep that separate. You would not then want to start adding to that IRA. And a lot of people are inheriting these right now because we have an older population who is starting to inherit money from their parents. And in many cases, because those parents grew up in the age of IRAs being an important part of your retirement planning. So just if you do inherit an IRA, from what I've been reading, it would be best to not add to that. Have another IRA that you're adding marital funds to. Because once you start, maybe you inherit an IRA from your parents, and then you start with your spouse adding X amount, $100 a month to increase that IRA, it suddenly is commingled property. And it makes it much harder in the event of a divorce to separate that out and have that perhaps be something that is just yours because it was your inheritance. It just creates a problematic situation if you start adding to it. So you want to keep it in your name. You want to keep it as it was when you inherited it. You do need to, when you inherit an IRA, you need to dissolve it over 10 years anyway. So you do need to be taking minimum distributions, or not even minimum distributions. You just need to be taking distributions over a 10-year period that will eliminate it altogether. That's the time you have to do that. So they're a little bit of an interesting animal. And so just the idea here is to realize that it's not all just money in a pot. That things have different characteristics and different ways of being handled. And so you want to make sure that you're clear on what everything is and put things in the correct buckets so that if you do get in a situation where you're splitting things up, you've done it optimally. So your attorneys will know what this is, but if you don't know and tell them what you have and the specifics about it, then mistakes can get made. So I thought that was pretty interesting. What was there before the marriage? Maybe there were other things. Maybe there was investment accounts or property or things that existed, assets, things, before the marriage. So you do want to make sure that you're clear on that because it may be handled differently. You want to update wills. You want to update kind of everything. So there'll be a lot of updating to do, whether you do that right away or you do it a little bit later. It's all good. So you just want to know all the components of what you're dealing with. And lastly, we talked about credit, watching out for your credit, being actually a little more careful of it because of the situation that you might find yourself in. And then creating a go-forward budget. The different banks talk about different things. There's a lot of information online about preparing for divorce, but I thought this was a good point. Really thinking through, what does it look like, a go-forward budget? What is a post-divorce budget going to look like for me? And so that means rethinking what you're spending and what you're going to have, whether you're going to have the house or you're going to be getting an apartment or whatever it is, and what a budget would look like so you can really plan ahead. That's super important, just to give you a sense of, understanding and hopefully some peace of mind that this is going to be okay and that you'll be able to manage what it takes to live in a post-divorce situation, and also know what to ask for so that you can sustain it. But if you don't do a budget, a futuristic kind of budget, you won't know. So I think that is enough for everybody right this moment. We could go on, there's more, but I think that this is plenty. And if you can get yourself organized in this way, it's going to take a lot of the, at least financial stress off of you, just to have everything there so that when you're being asked questions or whether you're needing to have these discussions, you're well aware of everything that you need to be aware of. Your tax situation will change. There'll be other changes. But if you have everything with you, you've reviewed it, you understand, gosh, money is so much about understanding it. So this is no different. So hoping that you're not finding yourself in this predicament, but if you are, there's a lot of hope, and getting yourself financially together is the start of building a new financial foundation going forward. All right. Thank you so much for being here today. And I'll put some info in the show notes for you. And hopefully we will see you next week on the Money and You Show. Please rate the show, give us a review. We'd love to get more listeners. And so share the show if it can help a friend of yours. All right, and we'll see you next week. Thanks so much.